We are on the verge of an epic currency crisis, one that could create one of the largest bubbles we've seen in human history. Last year, we showed you how gold was rallying in foreign currencies, in many cases to all-time highs. This year, gold is rallying even against the US dollar. Analysts like those who've warned us before the 2008 crisis are now saying that the next stock market crash will be even bigger and coincide with a currency crisis. The dollar index has not budged from its position since the December Fed rate hike, proving the policy is just a smokescreen for the poor US economy and reversal back to more money printing and the inevitable negative interest rates. Gold is the only true hedge against these central banks, and it's responding to the fiat currency war. Gold tends to have a direct response for central banks who give their local citizens discomfort in the value of their currency. But what happens when the central bank is managing the currency of choice for the entire world? What happens when the entire world wants to exchange their US dollars for gold, either because of an action the Federal Reserve takes or because the US debt passes a key psychological number with the markets, like say $20 trillion, a level we will reach later this year. Over the last 5 years, we have seen China and Russia stockpile massive amounts of gold, and China is set to have a direct impact on pricing gold in world markets. Since July last year, China has been releasing its official gold reserves, which many analysts estimate are just the tip of the iceberg. Since then, official Chinese government gold holdings increased by 104 tons. That's over 6% in just 6 months. But if you look at how much they're importing, it's a staggering amount, 217 tons for December alone. China, by the way, is both the world's largest gold producer and biggest importer. So not only are they accumulating gold by the truckload, not a single ounce produced is leaving their shore. China, across the board, is preparing for something big in our currency markets. Over the last few years, China and major countries have formed strategic and competing world financial institutions and trade deals. The BRICS New Development Bank began operating last year with an initial $100 billion. The BRIC countries are set to surpass the G7 countries' combined GDP by as soon as next year. The Asian Infrastructure Investment Bank opened in January of 2016 with 30 founding members and also an initial capital of $100 billion. Also, a modern-day Silk Road is returning with the first train connecting Iran and China being delivered just last month. This will further set China as the biggest world economy for trade with Europe and the rest of the world. It's no wonder world trade via sea routes has been collapsing, with the Baltic Dry Index at all-time lows, crashing 75% in just 6 months. With Iran, India, Russia, and China switching to trade in national currencies, the dollar is truly dying as we speak. It's just a matter of time before an oil-rich Middle Eastern nation chooses to dump the dollar and partner big with one of its closer trading partners in Eurasia. This is why Americans need to be invested in gold to preserve your purchasing power through this world crisis and transition. The end of the petrodollar era is approaching. The quasi-oil backing, which began in the 1970s, was only a temporary fix from the removal of the gold standard, and the gold price will rise dramatically very soon. For 7,000 years, man has mined gold deposits, making it possibly one of the oldest and most reliable businesses in human history, and one of the smartest, because unlike accumulating gold in the retail market, owning a gold mine allows you to keep producing the gold after your initial investment. A yellow metal that, if you took all that was ever mined and put it into a large cube, would have an edge of just 70 feet. Think about it. For all of human history, gold is so precious and so rare that if you took all the Egyptians mined, the Romans, and everything since, we would only have 3 Olympic-sized swimming pools full of gold. The headlines for gold these past few years have all focused on physical gold accumulation by China, Russia, and Eastern central banks. But what they have missed is a 7,000-year-old strategy that China is doubling down on. According to data compiled by Bloomberg, in 2013, asset purchasers by Hong Kong and mainland miners increased to a record $2.2 billion. China is buying gold mines at a record, something completely missed by both the mainstream investor and even the gold analysts, who tend to only focus on the bullion sales, which haven't been disclosed officially since 2009. Although according to Bloomberg, based on trade data, The physical bullion stockpile has likely tripled since then. China, who is aggressively buying gold, would spark an event if it disclosed how much gold it now has stockpiled. But imagine the true disclosure of how much gold they have when you add up all their deposits, not just in China, but offshore. $2.2 billion spent offshore in 2013 is equivalent to 46 metric tons of physical gold. But when buying gold deposits in the ground, this could be upwards of 5,000 metric tons, even 10,000 metric tons. And that is just 1 year of record mine buying from China. Gold investors recently dodged a bullet. Our investment window has narrowly expanded after the decision to delay the Chinese yuan's inclusion into the IMF SDRs in the fall of 2015. But time is running out fast. By August this year, Chinese influence will have infiltrated the biggest financial institutions in the world, with China only revealing their physical bullion above ground and saying nothing about their mine acquisitions. This explains their long-term strategy to implement some form of gold-backed currency. The world may well be on its way to the largest gold rally of our lifetimes. This strategy that China has taken of dramatically increasing their exposure to gold through deposit acquisitions can be also implemented by individual investors by focusing on specific gold companies who, in the midst of a commodities bear market and global currency war, are out acquiring already established gold assets, partnering with strategic investors like Rick Rule, Eric Sprott, and Doug Casey. A low-risk growth through acquisition plan, setting the stage for millions of ounces of gold purchased for less than a nickel on the dollar, where in some cases, millions of dollars have been spent on exploration. But today, distressed sellers are looking for a buyer, oftentimes at fire sale prices. When China admits to owning 5 times as much gold as they recently reported, and the world accounts for their huge mine and gold property acquisitions, we believe the gold price will go absolutely ballistic, with a repricing on the level of $10,000 per ounce or higher, as predicted by former CIA advisor Jim Rickards. To accelerate your gold accumulation strategy with ounces in the ground, visit futuremoneytrends.com/China. The slightest hint of dollar risk, the most dominant fiat currency on earth, could unleash an avalanche of wealth into the hard asset space, mainly the mines and mineral companies. You see, when you've got tens of millions of dollars, even billions, buying up physical commodities is completely unrealistic. It is only a matter of, do these investors bull rush into these assets due to greed, or flee into these assets due to fear of a currency crisis? We are not sure at this point, but we do see the latter as just as much of a possibility. What has benefited the US dollar is global uncertainty. Essentially, the dollar is the tallest midget in the room when it comes to paper money, which is why we see hard assets like gold, silver, oil, uranium, and copper soaring against the dollar very soon. To implement the Chinese strategy and accelerate your gold accumulation, visit futuremoneytrends.com/China. That's futuremoneytrends.com/China. Signs are already showing that a massive move into gold has started. Gold ETF holdings just rose for a record 40 days straight, and China is setting to take over pricing for the world gold market with the new gold benchmark in the spring of 2016. Right now, some of the best investors in the world are acquiring gold with one of the most legendary resource CEOs in all of North America, Keith Neumeyer. In 1 year, he's taken a small gold stock from 0 to nearly 10 million ounces of gold by acquiring 5 separate gold companies. Learn more about this strategic opportunity right now at futuremoneytrends.com/China.